Today's podcast is brought to you in part by the South Metro Denver Realtor Association, the resource for professionals, and by Valerie Glenn, mortgage consultant with Bank Group Mortgage Corporation, on the web at bankgroup.org. Today's guest speaker is Patricia Silverstein with a 2008 economic forecast for Metro Denver.
Notice, though, that we are continuing to outperform the nation in the Metro Denver region, and the expectation in 2008 is that we will continue to outperform the nation. The national economy, as I said, only adding about 1% new jobs. We expect that our employment growth rate is going to slip to about 1.6%. What does that mean in terms of the overall number of jobs being added in the area? Well, in 2007, that means we added about 24,000 net new positions. Again, a little bit lighter than the 25,000 that we thought we would hit in 2007. So a little bit lighter than what we expected. 2008, we expect to see a continued kind of pullback in that growth rate to just under 22,000 jobs. Notice that we're really seeing employment growth amongst all of the different industries as we look from 03 to 06, with one continuing notable exception, and that's the information side. Information, about 50% of the employment in our information sector comes through the telecommunications sector, and we are still just not seeing growth in that. A very important industry, of course, in the Metro Denver region, but one that, you get a little good news one week, a little bad news the other. On net, we're still not seeing a whole lot of growth. Alrighty, all of those job growths. Remember, we saw about 24,000 net new jobs, so we're starting to see that office vacancy rate trickle down a little bit. I have to say, though, it didn't come down quite as rapidly as I thought it would in 2007, but it has nonetheless been ticking downwards. The new construction has been kind of under check. It's been a relatively healthy market. In other parts of the country, they're kind of concerned about the future of the commercial markets and that type of thing because of what's going on within the credit markets. Here we had, that hasn't hit us as much. Many of the commercial projects were still, had that funding going into the latter half of the year. Those that didn't, though, we did see some pullback in construction plans. The side of the commercial market, though, that has really been performing quite well, and indeed is the market that everybody keeps pointing to as the most stable of the commercial markets right now, is on the industrial side. A vacancy rate coming in under 6% in 2007. We're starting to see we're continuing to see very stable levels of new construction in the industrial market there. One of the big points, and I think that this is probably a repeat from last year in terms of when looking at the baby boomers, but I think it's just something really important to keep in mind. We are aging. Now when you even take a look at the median age here in the Denver metro region is a little bit higher than even other areas where you think of as being strong retirement types of communities. So, and a lot of that has to do with all those baby boomers that moved here in the 70s and into the early 80s. They're just not leaving. We're staying here, and now we're bringing our parents here and that type of thing. So the median age is definitely been kind of increasing here. And this has, of course, great repercussions in terms of the type of governmental services that our communities need to provide, and the types of housing that will be demanded here. Because as us baby boomers age, we are also kind of taking a look at it and saying, gee, I really want to be out playing as opposed to mowing my yard. So some of those types of choices that we're making, some of those lifestyle choices in terms of housing options and all, I think are going to become more and more prevalent in the years ahead.